Can you hear me now, Mark? Can you hear me now? Can you hear me now? Hello? Hello, can you hear me? Great. Thanks, Mark. Thanks. Let me start over again over what I was saying, because most of the things were lost, right? So what I'm saying here is that when I look at the index futures, they are all looking green. But in my opinion, my default state right now is that this is probably a relief rally. It may probably take us forward for another 30 minutes to 1 hour in the morning after market open. And then I'm thinking that we are going to have a little bit of giving up all those gains. I'm saying that basically because most of the market was elevated, and it was the Mag 7 that was kind of holding it up, and the market breadth was kind of moving sideways. Now, if you look at one of the news item out here, it says analyst says Microsoft is cutting AI data center spending, which may have led to market sell-off. So whether the Microsoft data center spending cut is a fact or if it's a rumor, I'm thinking that all these Mag 7 companies which have been buying chips from NVIDIA, they are going to have a little bit of a strain on their earnings and their bottom line, because they're putting a lot of money into future technology, which is how they should go. It's a normal trend. I'm not criticizing that. But I'm thinking that when they put those kind of money and the revenue is yet to come in, we're going to see a drop in EPS. And that again is going to multiply with the P by E and determine the share price. So there is definitely going to be a little bit of drop before it picks up again, because there will be other opportunities elsewhere. So that's number one. Number two is that if you look at the news headlines, right? The news headlines are not very encouraging about the ability of the United States government to keep either the fiscal or the security or any of the branches of activities that it has in a predictable, consistent and reliable manner. The kind of headlines that we are seeing shows a lot of chaos, and the chaos is not good for the market. Unfortunately or fortunately, whenever there is chaos, even the one that is created by United States, money keeps rushing back into the US dollars and US treasuries. And as a result of which the US dollar becomes strong and this cycle continues. Now there is a growing realization across the world that what is happening is that all the earnings that are generated by companies outside of US gets flowed back into US and benefits the US rather than their own population. And therefore there is a bit of decoupling happening right now, and the victory of MERS in Germany should also give an idea that probably Germany would like to take leadership in Europe, and with US rolling back, that could mean that there's going to be a lot of different alliances, and the US companies probably have to think of how to reorganize themselves so that they can have regional subsidiaries which will operate within those regions, manufacture and sell within those regions, and try to circumvent this tariff business. So a lot of churn, I think, is in order, and therefore I think markets have to give up some gains. So let us start by looking at our indices. Let's go with the futures. Nasdaq futures are up 0.31%, but you will notice that they have to contend with diagonal line of resistance out here, and they have to beat this. And I am thinking that the short-term support should be somewhere out here. If we fall below this level, I think that then we should be worried. So I'm just going to draw this out here and mark this as green. So it's a temporary support I have put out here. It's at 21,442 for Nasdaq. And let us go to S&P 500 futures. And I've drawn this box out here. So we have been within this box all this while, right from, I would say, 16th of December. In fact, you could actually pull this box forward all the way up to 7th of November. Until now. So we have been trapped in this box, and we are still inside this box, and we have this diagonal line of resistance still holding us back. We have the 21-day exponential moving average holding us back. But fortunately for us, we are above the 200-day exponential. But if you look at the MACD and the momentum, they are not looking that great. MACD is bearish and momentum is below average. So from a futures perspective also, I'm not very confident that we are going to move up. That doesn't mean that we will not move up, but the confidence is not there for me to say, yeah, pre-market is going to decide the direction and we are going to continuously move up for the day. And then if we look at the 10-year 10-year yields, you can see that they are creeping up a little bit, and we had closed the 10-year at 4.43 on Friday. Right now we are at 4.49. So this thing 4.449. So this increase in the yields is definitely going to attract more money towards the bonds. And I'm thinking that given this kind of a configuration and the political uncertainty and the uncertainty within the US government and its various branches, we are likely to face downward pressure. That's what I'm thinking. Let's go on to look at, let's do genomics first because it's a shorter watch list. And you can see that across the board, genomics has lost. So there is going to be a little bit of a bounce back for genomics. And I'm looking at Verve out here. Verve has given up a huge amount of gains, and it dropped 7.02% on Friday. And it has fallen below this diagonal line of support that we had created, which has now become a diagonal line of resistance. It has fallen below the 21-day, and it's been supported by the, I think, the 200-day exponential moving average. So if you look at the situation of Verve, it's a bit precarious. Its MACD is also bearish. Momentum has fallen below average. And if it falls below the 21-day exponential, which it hasn't today because it has got a gain of 2.34%, but if the overall market goes down, I think Verve can also come down, and it has had a lot of gains among the various genomic stocks. This has had the most gains. So this is likely to give up the most in order to come back to mean. So I'm thinking that Verve, even though it's positive in the morning, it could have a little bit of sideways movement or a downwards bias. And if you look at Ginkgo Bioworks, it is down 1.11% in pre-market trades. And I'm thinking that we can kiss goodbye to the 16.53 target that we had. We already met and achieved it. We are not going above it. We are still below the 21-day exponential moving average. And we are also below the 200-day exponential moving average. So overall, I think we are looking bearish along with the MACD and the momentum. Caribou Biosciences was down 7.09%, but pre-market it has clawed back almost all of the losses by going up 6.11%, but it still has got a little more to go. It's below the 21-day exponential, 200-day exponential, and the diagonal line of resistance. MACD, even though it is bullish, I think it's moving sideways, but momentum is weak. So I don't think Caribou will be able to retain the gains that it has shown in the pre-market session, but no one ever knows what happens with genomics because there is no transparency in the information that's available. Good morning, Inf. Thanks for joining. Good morning, Mark. Thanks for joining. CRISPR Therapeutics is down around 5% on Friday and 0.46% in pre-market trades. It's well within the diagonal line of resistance that we have from the previous bear channel. So all the exuberance is gone. It's back down again. Reality is setting in that the only pony that has got in play is Casgevy, and it has got to get some other therapy monetized. So until we get some catalyst about launch of a new therapy into the clinical trials or some data release about the oncology targets or the autoimmune targets, I think unless we get any of those things, we are going to be in line for filling up this gap up that we had. So it's not a great news for the CRISPR guys, but this is what it looks like to me based on my limited knowledge of technical analysis. Grail was down 14.72% in the trades on Friday, and pre-market it's up 2.38%. But I'm thinking that it's going to test the 21-day exponential again today, and that is because the momentum is dropping, and I don't know if it's going to be able to stay above the average mark. If momentum stays above average, then I'll be optimistic on Grail again. Looking at Prime, it was down 5.27% in pre-market trades, in the trades on Friday, and in pre-market trades it's up 5.56%. But it's just about this diagonal line of resistance, so we have to see today whether it can go above. Momentum had been dropping yesterday, and MACD was also moving towards the signal line. So I'm thinking that there's a bit of consolidation due for Prime, and I'm thinking that this diagonal line of resistance might yet turn out to be a line of support. So I'm going to give it a benefit of doubt here today. Then moving on to Beam. Beam is flat in pre-market trades after falling 8.18% yesterday, which means on Friday. And we have fallen below the line of support at 30.74 and converted that into a resistance, apart from falling below another support at 33.38 and converting that into a resistance. So overnight, Beam is starting to look really bearish, and MACD is also deteriorating, and momentum is also dropping. Earnings are due on the 4th of March. Maybe pre-earning jitters are in place, but we still have support at 29.41 for today. Looking at Altimmune, it was down 3.02% on Friday. It continues to remain above the support of 6.22. It's currently quoting at 6.49 in pre-market trades. That is up 0.93%. MACD is mending, but momentum leaves a lot to be desired, so not very optimistic about Altimmune. Bluebird Bio is down 2.21%, and my prediction is that Bluebird Bio will go all the way down to $3, because that is the purchase price by the private equity company, and there's a gambling part, which is the change dollars that will be given if 600 million sales happens before 2027 in any consecutive 12-month period. I'm thinking that that's a very long shot. So those who are gamblers might still try to stick around at $3. So I'm predicting that Bluebird Bio will fall all the way down to $3. So selling some covered calls might be in order. That's my personal opinion, but not financial advice. So friends, you can do what you like with that information. Next, going on to the next target, which is Allogene, which is still got a little bit of gap fill to be done out here. It's up 0.46% in pre-market trades, but yesterday it had dropped 3.77%. MACD is just above average but dropping very fast. Momentum is just above average but dropping very fast, and MACD is moving towards the signal line. We got earnings on 26th of February, so there could be a little bit of jitters for earnings. And our next support is this diagonal line of support and the 21-day exponential moving average. Please note that we are already below the 20-day moving average. And then we have this horizontal line of support at 1.79, which is going to help us stay afloat. So let's see what happens when the market opens with Allogene. mRNA is down 2.73% in pre-market trades. It's below the 21-day exponential and the 200-day exponential. MACD is bullish out here. So momentum, if it was above average, I would be optimistic, but given the fact that we are negative in pre-market trades, I'm thinking that the momentum is going to stay below average. So not much optimism for mRNA. ARCG was down 5.67% in pre-market trades, in the trades yesterday on Friday, and pre-market it's up 1.30%, but MACD is not looking great, momentum is not looking great, and we are still within this bull flag that we had created in the past, broken out. We are back into that trajectory, so I'm going to mark this horizontal or diagonal line of support into a diagonal line of resistance. Things are not looking that great, I think, for ARCG and the biotech sectors generally. PACB, after dropping 6.10% on Friday, is up 2.60% in pre-market trades today, but it's still below the 200-day exponential moving average and the 21-day exponential moving average. Momentum is below average, not too optimistic about PACB today. Intelia, after dropping 0.65% yesterday, is up 2.05% in pre-market trades. So I'm looking at the 21-day and the 200-day exponential moving average. We are below the 21-day exponential moving average and above the 200-day exponential moving average. So there is still a little bit of hope for Intelia. MACD is bullish and momentum is also above average. We are awaiting earnings on the 27th of February. So I'm thinking a little bit of consolidation is in due. And Illumina, after dropping 3.09% on Friday, continues to drop another 0.01% in pre-market trades. I marked a huge zone of support out here, which starts somewhere around, I would say, $90.85. So I'd be waiting for Illumina to go out there, and then I would like to load up a little bit on Illumina. I could do it either as a call, either as a direct purchase of 100 shares and wait for it out there, or I might wait for it to go down to 89.33. It'll all depend on how the overall market environment looks like and how weak or strong Illumina turns out to be around there. MACD is seeming to improve a little bit. Momentum is also at the bottom, always providing for a dead cat bounce possibility today as well. So I have not written off Illumina totally, but I would be really happy to buy some at the very bottom. IMTX is up 1.52% in the pre-market trades after being flat on Friday. Could be a dead cat bounce out here. Then we have Editas, which dropped 6.80% on Friday and has dropped another 2.08% in pre-market trades. And we have earnings on 26th of February. MACD is tending towards the signal line to become bearish. Momentum has been dropping significantly, and with the pre-market trade the way it is, I think momentum will become average or below average. So I think I'm not too optimistic about Editas for today. Iowa is up 0.52%, has been gaining on Friday as well, and MACD is bullish and momentum is still below average. I want momentum to go above average. Optimistic about Iowa, but not going all in. And Unicure down 0.93% on Friday, continuing to go up at 0.16% on pre-market trades, but I'm thinking that it's aiming for this gap fill out here, so it's going to steadily continue on its way down. Vertex is up 0.16% in the pre-market trade after being up 0.81% on Friday. Vertex seems to me to be in a good track to continue going up. It's also on a bull channel. It's above the 200 and the 21-day exponential moving average. I'm liking everything about Vertex. Then go on to AI. Google is down 2.71% as of Friday, and it broke through into this huge area of support that we have out here and fell down below it. And this morning it's at 184.80, and if I look at my area of support, it's 182.04. So we are above this, and we are well inside this area of support that we have for Google. What does that mean for Google? I think that there could be a consolidation, and we'll try to struggle and stay above 182.17 today. Pre-market, we have a gain of 1.73, but if you look at the way MACD is, it was very bearish, and momentum was also below average. So I'm thinking that we are aiming to do a gap fill out here before going up. This is going to act as a magnet, so a little bit bearish out here. Tesla is down 1.63%, and momentum is down 4.68%. I mean, momentum is also down. It's looking like it's looking as if the momentum is struggling a little bit. I think there is a little bit of fatigue out here with all that Elon Musk is doing on the government side. And recently he wrote a letter to all the federal employees saying that they have to account for what they did in the last week. So that is not sitting very well. So probably not Tesla itself, but maybe the bad will about what Elon Musk is doing, the lack of goodwill, I would say, is causing a little bit of fatigue out here. MACD is also bearish, so I'm thinking that that's weighing on Tesla. Apple is down 0.63% in pre-market trade after falling 0.11% yesterday. MACD is bearish. Momentum is flat but still above average, and we still have got a lot of bullish support for Apple, so it could move sideways. Meta is up 0.43% in pre-market trade after falling 1.62% yesterday, on Friday, and we have got this 200-day exponential moving average which is pushing it down. We still have support from the 21-day exponential, so things are looking pretty okay. And I think the MACD is indicating a lot of weakness. Momentum is also just at around average. So I do not know where we are going to go. I'm not resoundingly bullish with Meta. It has very rich valuation. So I'm thinking that it's going to test the support out here. It's going to start moving down towards the support, which is at 638.94. So expect Meta also to come down. Microsoft is still working around an area of consolidation where it was all the way from 12th of February until it broke out on 19th of February, and then it has given out most of the gains. It's gone below the 21-day and the 200-day exponential moving average. So I'm thinking that we are going to be a little bit sidewards and flat with Microsoft. All of this could be a very enthusiastic pre-market approach, but maybe as soon as market opens, we are going to come down. And that I would say for all of Mag 5. I don't want to go through each one of them, but we have got a lot of bearishness out there. Nvidia is the dark horse out here, in my opinion. Nvidia was down 4.05% on Friday and created a new resistance at I would say, let me just mark this out, 135.82. Pre-market we are at 136.76. We can't always trust the pre-market action, so I'm going to wait for the market to open up. And I sold my Nvidias mostly at 139 range, so I can always buy back if the market sentiment turns positive. We have got our earnings coming out later on 26th after hours, so there's plenty of time for us to do whatever positioning we want to. So I'm going to wait and watch on Nvidia. And Qualcomm is down almost, I think, 4.74% as of Friday, and pre-market it's up 0.37%. We are still above the, I think this is the 21-day exponential moving average, is it? No, it's a 200-day exponential moving average. So we are still above the 200-day exponential moving average. Towards that end, I'm okay, but I don't think we are going to meet the cup and handle target out here. I had bought Qualcomm based on this cup and handle target, so I have to now look forward to disposing it off, but I'm in the deep red with Qualcomm. I'm going to wait it out. I'm not feeling encouraged this morning. AMD was down 2.92% in pre-market trades, and I have drawn two lines of support. One line of support was the original. The second line of support seems to be the new one that we are developing, and we dropped below it almost. We are on top of it on Friday, and this morning we are above. So I'm going to use this line of support as a guide to say that this is our support out here, but MACD and momentum don't look very encouraging. FNGU is up 1.54%, but I'm thinking this pre-market optimism is going to give way to further drops on FNGU this morning after market opens. So that's what I'm thinking of. Broadcom, again, it's looking weak where we have this gap fill that has to be done. Oracle is struggling to recover. It dropped 4.65% on Friday, and it fell below the 21-day exponential moving average. And I'm thinking that it's going to consolidate a little bit because MACD is still bullish, or has it become bearish? Oh yeah, MACD is bearish. So momentum also being above average. I'm thinking consolidation is in order. It may struggle to jump above the 21-day exponential, but that's where we are. Palantir, which is very richly valued, dropped 4.63% in the pre-market. It's dropping another 3.11% now. This gap fill is very imminent because government is cutting all the costs and everything wherever it can. So Palantir contracts might also be under strain. So that's what I'm looking at out there. And I think that brings me to Adobe, another stock which I had bought based on cup and handle pattern. I took profits somewhere when we started consolidating out here, so I don't have any more Adobe in my hands. It has fallen below the 200-day exponential moving average out here, and it's looking bearish again. MACD is also becoming bearish, but pre-market we are seeing a little bit of a hope, momentum being below average. I would say that a consolidation may be in order for Adobe at the very best. And at the worst, it may start its movement downwards. So SMCI again is down 5.40% on Friday and a little more today in pre-market action. And I'm thinking that it's going to find support with the 21-day exponential and the 200-day exponential moving average. It had been super bought up. RSI was super heated. Now it started to cooling down a little bit, but I'm still thinking that the financial clouds on top of SMCI has to clear off. Till then, this gap up out here is going to act as a magnet dragging SMCI down. So that is my prediction. ARM Holdings was down 3.98% in the action on Friday, and pre-market action shows it up 0.24%. MACD is bearish. Momentum is also below average. I think we're going to see further drops in ARM, and ASML again is continuing to consolidate. It was down 0.79% in trades on Friday. It fell below the 21-day exponential moving average, and it also fell below the 200-day exponential moving average. But in the pre-market action, it's up 0.93% and moved above the 21-day exponential. So I'm thinking that there's a little bit of consolidation potential that can happen out here, given that momentum was on average. And looking at the pre-market activity, I think we're going to stay on average momentum, move sidewards. That's a possibility for ASML. So overall, I think we are dropping. Let us look at the offbeat quantum side. Rigetti is up 1.21% after dropping 6.28% on Friday. We still have our support at 9.86. We are at 10.84. MACD is looking very discouraging. Momentum is also looking pretty useless. So Rigetti may give up the gains that it has shown in pre-market. SMR, the small nuclear reactor factory, again, it's also looking really bad. I had bought it based on this reverse head and shoulder pattern. I'm on terrible losses, but these are all small holdings in the portfolio. So I'm going to just hold on and see what I can do in the near term, because we still have support out here in the diagonal line of support. So that's what I have out here for you, my friends. Let's look at the cryptocurrency before we finish off everything. Let's go to currencies, and I'm looking at Bitcoin USD, which continues to consolidate in a range. Out here we have a support at 95,820. Right now we are at 95,723, fallen just below it, and our MACD is not yet bearish, but it's in that area. Momentum is below average. So I think the way the stock market will go, I think that's the way that Bitcoin is going to go. And given the fact that the yields are picking up in the bond side, I'm thinking that money is moving out from here to there, and unless the bond yield starts coming down, we're going to see this kind of action out here. Ethereum is not yet showing the altcoin season yet, but it's still on this diagonal line of support, the bullish support line out here. Maybe it might break down today, but MACD is looking pretty decent, but momentum is not picking up. My cup and handle target out here, which was for 4495, seems like a fairy tale. I'm giving up on that. Things are not looking that great for crypto. And I'm just going to go into indicators again to look at gold and see what's happening with gold. Yields going up. In theory, gold has got to drop. So let's look at gold, and gold is up 0.53%. It's still above this mini resistance that I had created, which has now become a mini support. So gold is starting to look good. So maybe money is moving out of US dollar and getting into gold. I don't know, but there's a whole lot of hype in the market for gold. So I've got a little bit of gold in the ETF side, and also a good deal of gold in the locker. So I'm happy with what's happening with gold. I have notched plenty of gains, but I'm not selling any. I've also bought a little bit of silver ETF. So I'm on that side. But if you look at the breadth of the market, this is the 50-day, 100-day, and the 20-day above average in S&P 500 for the number of stocks. The breadth has been falling. So overall, I'm bearish on the market. So I'm thinking that when the market opens, all the pre-market gains that we had seen for AI is all going to be given up, maybe within the first hour of trading. So that's where I am. And guys, those of you who are already on the live stream, can you please comment and let me know what are your thoughts so that I can recalibrate and come up with other theories, if any. So while I wait for you to comment, I'm looking at Dow Jones, the way it ended on Friday, and it has ended just above the support of 43,294.06. MACD very bearish, momentum also dropping very sharply. So I'm thinking that Dow Jones is going to test the support today, and if it falls below here, then there's a huge gap fill that needs to be done. So I'm going to just show you those lines and put two lines out there to show the gap fill area. And this happens to be the gap fill area for us, and that is 42,913, which is going to be the first line of support if we drop down, and then the next line of support is going to be the bottom of the gap fill area. So you can imagine this to be an area where the index is going to try and do a gap fill. That said, let us look at S&P 500. The way it ended, it fell below this diagonal line of support that we had drawn from earlier, and it was below that. So first of all, it has to go above this diagonal line of resistance, and MACD is looking bearish. Momentum was also below average, so we have to see if it can manage to break through. And if it did manage to break through, then we have the 21-day exponential that it has to break through. So 21-day exponential is going to be a resistance, and it's now at 6061.95. that is the resistance, and we are at 6013.12 as of Friday's close. So that's a big challenge out there. Russell index continues to give up. Pre-market, it's up 0.67%, but I am thinking that Russell has only one way to go, and that's going to go down. The little bit of increase in the yields that we have seen on the bonds is going to boost up the regional banks a little bit, but overall, I think the tendency is bearish. We already fallen below the 21-day exponential, and I'm thinking that on Friday we got support from the 200-day exponential, and today we are going to see that again as a support, but there's a chance that we may fall down below that. Then we have Nasdaq. Before I go there, let me say that IWM, even though it had a huge drop, there is going to be a dead cat bounce effect, which we may probably be seeing in the pre-market trading, but that dead cat bounce could potentially end before the day is over, and we have a resistance at 220.48, which we have to break through, and right now we are at 219.24. So that's what I'm seeing out here. Put call ratio is mildly bullish to neutral, and VIX, which had spiked 3.18% on Friday, could probably see a challenge to 18.16, which is our next resistance. So that's a very distinct possibility on the cards for VIX, because MACD is bullish, momentum is also above average out there. So that's what I'm seeing. So guys, any theories from you guys? What are you thinking is going to happen? Please let me know, or else I think I'm done with what I wanted to say this morning about the markets. And just to summarize, I'm thinking that this pre-market positive that we are seeing could probably be a dead cat bounce, and we might give up those gains maybe an hour after the market is open, or maybe around midday. But I'm not thinking that these gains are some kind of a sticky and positive gain, and I have given you my reasons for that. So let us hope that the chaos are cleared off. And while we are at the CNBC website, I am really happy and thrilled about Berkshire's earnings, even though their EPS has gone down a little bit. That's what I understand from reading this quickly. But I think that a pre-market is rewarding Berkshire, and my investment, a good portion of it is in Berkshire Hathaway on the Canadian side, and that has picked up significantly. I'm positive almost 20% out there. So I'm very happy about Berkshire, and they are sitting on a pile of cash. And in my portfolio, I'm sitting on a pile of cash along with Berkshire. So I'm happy where I am right now, given the overall market situation. And thanks, Mark. Thanks for the positive compliment. It helps a small-time content creator like myself, and it boosts my confidence. Thanks for joining me. Thanks for joining. And I will wind up this session here. Thanks, and have a great day. Bye for now. Have a nice breakfast. Have a great day. See you later.